So what I wanted to do first is just define some terms, because it's important to know these terms in order for you to understand what you're doing, if you're doing fundamental analysis. And Randy, you know, I have in the 9 Money Rules Millionaires Use a free 5-step proprietary stock screen that we'll get into at some point as well. And in order to understand that 5-step stock screen, you need to understand some terms that are on the balance sheet and on the income statement or summary of operations. It's also known as of a company. So let's dive into the balance sheet. And the balance sheet is where the assets and the liabilities and the equity of a company is. That's the statement where you find those items. So what are assets? So for a company like Apple, believe it or not, it has a huge amount of cash and short-term investments. Short-term meaning less than 1 year. So $194 billion in cash and short-term assets. The total assets of Apple, and this is dated, this is a couple of years ago, 317 billion. But almost 200 billion of that so 2/3 of that, of the total assets is in cash and investments less than 1 year. Now, stocks are a separate category and they don't invest in stocks. So it's just short-term investments, like they're buying a treasury. The government issues short-term notes or bills, 3 months, 1 month. So the government's borrowing money from you and me all day, every day. And Apple's bought some of those treasury bills and treasury notes that mature in a month or 3 months or 6 months. And they're considered very low risk, and they're getting a small return of 2 or 3 or 4%. So that's where most of the assets are of Apple. Most people don't know that. It's not, they also have, property and plants, and their iPads that haven't sold yet, and their iPhones and their AirPods that haven't sold yet. Those are held as well as accounts receivable. But all of that only adds to another 100 billion. So it's really interesting that a company like Apple, and if you look at a lot of technology companies, most of their assets are in cash and short-term investments. So those are assets. If you look at a financial company like an insurance company or a bank, which is my specialty, financial companies, when I had my hedge fund, we only invested in financial stocks. And so you mentioned in 2008, the market was down 40%. Financial companies were down 57%. And we managed to make a little bit of money in 2008. And we were only investing in those companies that were going down a ton. Now, we were hedged. So, let me for a second explain hedge funds. Hedge funds, there's 1,000 different types of hedge funds. My hedge fund was a stock fund and a bond fund. But we mostly invested in 2008, it was only stocks. And we were betting that some stocks were going to go up and other stocks were going to go down. So we were hedged a bit, right? So we should go down less than the overall market when the market goes down. That's the idea of the hedge. And we should go up less than the market goes up when the market goes up. So that's a hedge fund.